Hey everybody, Real Estate Ninja here. I hope you're doing well. I've got two warnings for you. One out of JP Morgan Chase Bank about the economy in 2024. They're warning about harder times coming. Another one out of Bank of America, but it's not a warning from Bank of America. It's what Bank of America is doing, and that is closing credit lines. And you are going to see that throughout 2024. You're going to see credit get tight towards halfway through 2024, even when the Fed is lowering rates. Because I want you to understand the Fed only would lower rates for two reasons: to ease lending, so that encourages banks to lend money, and in direct relation to that, people would borrow money and boost economies, boost us sectors, real estate sector, stocks, things like that. But also, they're going to do a head fake. You're going to do it. It's going to be political. You watch this. It's going to be exciting. So here we go. Let's just dive into the first story. This is out of the Daily Hodl. It's entitled "JP Morgan Chase Issues Economic Alert for as 2024 Arrives. Warns Market Declines and Volatility Are Incoming." The story came out yesterday afternoon. It says, analysts at America's biggest bank are sending a fresh warning to investors as the new year arrives. In a new note to clients, JP Morgan Chief Market Strategist Marko Kolanovic predicts declining growth and a likely recession will stifle U.S. equities, reports Yahoo Finance. Kolanovic believes the U.S. markets are stuck in a catch-22 situation and says the Federal Reserve may not lower interest rates until investors feel more pain. That is absolutely true, and Jerome Powell has made that very, very evident. He says higher for longer, higher for longer, higher for longer, and then this last meeting they said, yeah, we'll pencil in. Remember, pencil has an eraser. We'll pencil in 3 rate cuts, okay? Even those 3 rate cuts, if they happened, would not be enough to stimulate the real estate market. Okay, 3 rate cuts of, let's say, 25 basis points, which is what they do in the beginning, because there's no emergency, right? If there's no emergency, they're not going to go big. They're not going to do 50, 75, or 100 basis point drops. They do 25. That's going to bring a mortgage for somebody with excellent credit and 20% down payment. It's going to bring them down to the 5.5% to 6% range. Let me ask you this. Do you think, type 1 if you agree, it's not going to do anything? Type 2 if you think, no, that's going to spur a lot of borrowing. And the reason why I ask that is because those were the rates last May, and last May, velocity was coming to a grinding halt. What happened from May until this last November just put the cherry on the top, all right? Also want to remind you, today is the very last day the real estate course will ever be available for $199. As a matter of fact, it won't even be available for $1,000 after tomorrow. I will stop talking about it. Thank heavens. I have given everyone 1 year's opportunity, okay? So today is the last day. The links are down below. So it says here, Kolanovic believes, he says this is a catch-22 situation. This would imply that we would need to first see some market declines and volatility during 2024 before easing of monetary conditions and a more sustainable rally. JP Morgan analysts believe stocks may be poised to significantly underperform cash, says Yahoo Finance anchor Sienna Smith. She says, we know Kolanovic has tended to be a little bit bearish in terms of his expectations, limited upside that he's seeing for equities this year. In his expected environment of declining growth or a recession, and remind you, I'm going to get to this Bank of America credit card story because I think it's very important that people get how big of a deal this is as banks pull back credit, right? But we're talking about JP Morgan and in Kolanovic, one of their main analysts. He's saying that the group could actually underperform cash by around 20%. He's talking about equities. So clearly he sees a lot more downside risks ahead of the markets, or head for the markets. Smith says all eyes will once again be on the Fed, with investors potentially over-optimistic on if and when rate cuts may happen. A lot of this and a lot of these projections hinging around what the Fed rate cut timeline looks like, exactly when we could potentially see a rate cut. The market, very optimistic, maybe a little bit too aggressive in pricing in the fact that they see one as early as almost the first quarter of March of this year. That's fast. Let me ask you this. Do you think that the economy is primed and ready? I mean, not wanting, but needing a rate cut. I believe the opposite. The reason why is because the Fed started raising rates in the first place because inflation on food and energy. All right, they wanted to cool that down. How do they do that? They cool everything down. And we're already seeing housing declines all around the country. It's happening. Yeah, you're seeing a couple blow off tops because a few people are buying some condominiums in Boston and some other cities like Miami. Do you want to test the real estate, the nation's real estate market against Miami? Because last time I checked, that place is a little crazy. It's just bloated because of insane money that goes in there. The tax-free benefits and billionaire row. That's what's driving that market. That you can't base the world off the nation's real estate health off of Miami, because you don't make that much money. I don't make that much money. So it says here in closing on this story, it says when you take into account and compare that to some of the more reserved expectations, there certainly is a wide variety of when that timeline, they're talking about rate cuts, is going to be. And also, not only that, but once the Fed does start cutting, how quickly then will they continue to cut is also obviously up for debate. And I've told you this before, they're going to dip a little bit. If they do, it's going to be for political reasons. They're going to dip a little bit, possibly maximum 20% of the total rise that we've seen in the last 2 years. They'll pull 20% back in rates, and we're going to find out real quick what inflation's about to do. And they're going to snap back in the same year, and they're going to start shooting like crazy, especially because our bond market will implode. Our bond market, the government's going to try and raise debt. There's going to be nobody there to buy it. And then we're going to see some really big problems because rates are going to go high. The 10-year will do exactly like it did this year. It will go far higher, faster than what the Fed was doing, raising those rates. Now, let's talk about a story out of the U.S. Sun. This is about Bank of America, and this is what happens when banks get nervous. And we see all these analysts warning, and I have to understand, let me read this. Crazy credit. Bank of America closes all 4 of my credit cards after 10 plus years. I have a perfect score, and no one will tell me why. The ninja's going to tell you why. See, right now, banks are being scrutinized for a couple different things. How much or a lack thereof of deposits that they have, and how many loans they have out. Well, part of loans, having a mortgage that you have out to clients, or mortgages, credit cards, all that stuff is one thing. But when you have a lot of clients with credit lines, those are treated, even though they're not being used, zero balances. Let's say this guy's got 4 credit cards, and let's say he's got 0 balances on them, and he's got perfect credit. Bank of America is getting dinged for those credit amounts. So let's say those 4 credit cards add up to $80,000 or $100,000 in potential debt. Well, just like they ding you, the banks ding you for having potential debt on your credit score when they run it, looking to see if you qualify for a new mortgage. They get it. Also, the banks get dinged by the Federal Reserve and other banks lending them money overnight for having those lines open. So they sit there and they say, close, close, close. In 2007, I remember I just sold all my homes. I was getting ready for this crash. Actually, it was 2008, sorry. It was in the spring of 2008. I'm at breakfast with my father, and this really pissed him off. He got so ticked. I'm sitting there, we're having breakfast at our favorite breakfast joint, and I look up at the TV screen, and I could see banks are closing credit lines. They're closing credit lines, and I'm like, holy cow, it's happening. We didn't have, YouTube was so in its infancy. I didn't have the kind of, social media news, like we do now. And I saw it, I'm like, oh my gosh. And I had a 0 balance. I had a $100,000 credit line pulled, a HELOC against my home, and it had 0 on it, right? I used it as emergency funds for buying deals. And I said, Dad, I got to get up. I got to go. I'll be right back. And I always carried my HELOC checkbook with me. I know it sounds crazy, but I, find amazing sales and spend $5,000, $6,000 at a time to buy a ton of inventory for my business. And then I would sell it, right? And then I would pay it off. I was making money hand over fist because by then things were already bad, right? I'd sold my homes in 2006. It's 2008 spring. Bear Stearns had already closed their doors. And so what I did is I literally got up. We hadn't gotten our food yet. I jumped in my truck. The bank was 1 block away. I had a HELOC with Citibank. I drove my butt down to Wells Fargo, wrote a check for $100,000 to myself and deposited it, cashed it, boom, like that. I got back to the breakfast joint. My dad was fuming. He's like, you know what? You are so busy. You just, everything's rush, rush, rush. My dad had the same HELOC. He had a zero balance on it. We can laugh about it now, but about a week later, he got a letter in the mail that said that they were shutting down, they were taking, I don't remember what the HELOC was for, but they took like at least 50% of the balance away. And what they did is they said, you know, instead, let's say it was $100,000 a HELOC and he had zero on it, they said, you are now limited to $50,000. He was fuming pissed, and I said, see what happened? See, what people don't understand is that when banks are in trouble and we're in a banking crisis, they're going to start to clear out these credit lines. And what you think you've got as a safety net is not going to be there tomorrow. So you got to be careful. Now, this is interesting because this is one bank all these credit lines were with. So, I mean, come on. If you would have divided up, you know, your credit cards or your HELOCs over different banks, you would have had some safety net there, right? All right, so I told you that story. So now let's read about what's going on with Bank of America. And I think this is going to be a massive trend in the next couple of quarters of 2024. And that is banks lowering your available credit, okay? So it says here, this is the title of the U.S. Sun, crazy credit. Bank of America closes all 4 of my credit cards after 10 plus years. I have a perfect score and no one will tell me why. And again, this is what's going to lead to the greater real estate crash. If you want 80% off, links down below. It's the last day this will ever be offered, okay, at this price. It says here, a Bank of America customer was left looking for answers when their credit cards were closed with minimal warning. Don't you love it? They use the word minimal. I'm sure they told them. The Reddit user posted in a forum for advice on credit cards for advice on what to do. They explained that they had missed one payment 6 years earlier and had an almost perfect FICO score. I checked TransUnion and the bank in question had checked my credit report one day, then promptly on the same day sent a mail with no details on why my credit cards I had over 10 plus years were closed, they wrote. The customer service representative didn't give them any details on why the accounts were closed, but the poster did say another institution they have had a credit card with ran their credit report the day before Bank of America made the decision to close the card. In the replies, people shared tales of caution from similar experiences and offered advice. Let me give a little bit of background to how this works. So there are systems in place that when you have multiple lines of credit out, there's a way of them being able to, and anybody working in the industry, please put down the comments below, back me up here. When you start asking for money and it's pinging your credit, they're looking for your credit, they're looking at everything else, they can also get pinged on that side and say, hey, you got a borrower that's looking for more money. And they go, why? He's got a credit card here with zero balance or something like that. And it could actually cause them to go, hey, let's look at this. Or an algorithm look at it and go, you know what? This person doesn't need the line. Let's close it. Because we're concerned maybe they're getting ready to make some big purchase. And we can't have that. Their income to debt ratio doesn't support that, right? And so it works both ways. Just like I said earlier with the banks, you know, when they ping you and they go, hey, you know what? Your debt to equity is too much. You've got to have your you know, like, let's talk about just buying a down payment on a house or buying a house. You know, you have to have your money seasoned for a few months in the bank account so that then we know it's your money. It's sort of there and stable. But then we look at your debt to income and it's way off. And many of you go, what do you mean? I'm like, I make my bills fine. They go, yeah, but you got these credit lines. Even if you got a zero balance, we look at that as tomorrow, we give you the money for your house. The next day, boom, you could rack up all those credit cards and now you can't pay us. So you've got to close off those credit lines or consolidate them and get them under that debt threshold. Well, banks have to do the same thing. Banks have to go and justify to other banks when they need to borrow money overnight in the overnight lending rate world. They need to be able to justify their balance sheet as well. Okay, so that's why they're always keeping track of what you're doing with your money or lack thereof. Right? You got a credit card out there with zero balance. It doesn't mean you got any money, but you have the potential of taking that money out. So now, one person said, BOA did this to me, called and talked with a nice lady for an hour and found out why. They try calling in until you get connected with someone, which is helpful. How many people have the hardest time getting someone on the phone in a bank? Like, seriously, put it down below. I hate it. Another person added in these comments, I shut down my checking account with Bank of America, and 6 months later, they closed my credit card, no letter, warning, or anything. Weirdly, they left the other credit card I had with them open. No late payments on either, so who knows? Now, they go into this thing called the bank breakup. Unfortunately for customers, banks do reserve the right to close accounts abruptly with little explanation. You know, I think people, it's really scary how high our credit card debt is in our nation. And it's only going to lead to tragedy because, and that's why our president is sprinkling, he's salting all of this, like, it's like this dangling carrot on a stick, the loan debt forgiveness for student loans. You know, people haven't even really thought about how many people have private student loans that aren't even up for some type of debt forgiveness. You know, I know somebody that that makes like $400,000 a year and had, I want to say it's $600,000 in debt wiped out, or maybe it's opposite. She makes 600 and she got 400. Point being is this, it was a lot of money. And it really is real. You know, the government is out there doing that kind of stuff, but they're not doing it for the masses. They're only doing it for certain people. You know, if they work in certain sectors, if there's certain ethnic groups. I mean, it's really sad. It's not the majority. But right now, our credit card debt in our nation is at an all-time high, along with all these other types of debt, card debt and all this stuff. So if you think for a second that we're not going into a tragedy, I don't know what to tell you. But you're probably going to have a hard time keeping it gainful employment over the next few years as this whole thing keeps crashing down, because corporate debt is in pain. Commercial mortgage-backed securities are in pain. Mortgage-backed securities, that crisis just began, and they're trying to keep it really quiet as Freddie Mac is inquiring why one of its largest paper sellers sold them paper with people with, let's say, not so excellent credit or backgrounds when it comes to their debt-to-income ratios. So if you're ready to take advantage of this, let me know. I got 80% off links down below, teach you about real estate cycles and how to buy properties right, and how to identify the properties, and how to plan right now, how to get out of debt, how to get your balance sheet set up perfect. I give you no excuse, and I give you a 14-day money-back guarantee. If you want it, 80% off today, tomorrow. That course will never be that much. As a matter of fact, I won't even sell it for $1,000. So I hope you have a great day. The what channel is this on? Real Estate Ninja is out. Man, that took me a while.